You late comers. Sorry, guys. All right. All right, let's begin. So again, if any issues with the sound or you can't see the slides, please let me know via chat. I muted everyone, but you can use chat if any issues with recording again. So. Okay. Property in SMSF webinar. Today, I'm going to talk about, obviously, property in SMSF. So I begin my presentation with disclaimer. So the information which I'm going to provide today, it's a general information only. It's not a financial advice. It's not even tax advice because I didn't consider your personal circumstances, objectives, and needs. So keep it in mind. It's just an information for you guys to consider what you can do in your self-managed superannuation fund, how you can invest in property, and no more than that. So this is a disclaimer. So housekeeping. So I muted everyone. If you have any questions, again, please use chat to ask me any questions. And also I will open the chat at the end of my presentation for the questions. And this webinar will be recorded, and recording will be sent to you. So it will be published on YouTube. Again, it's not going to be open for public, just for people who registered for the webinar. Right. Who am I? So my name is Natalia Clark, and I've been in Australia for 20 years. I've been helping people to build wealth in their self-managed superannuation fund for 20 years. I'm a registered tax agent. I'm a SMSF auditor, and I'm a SMSF specialist. I've got Master of Accounting degree. I've got CPA degree. And I also I'm authorized representative with a limited financial license as well. So I can provide advice on a self-managed superannuation fund. So it's a limited advice, but nevertheless, I do have a limited license as well. So what are we going to cover in this webinar? We are going to cover how you can invest in property. So what property is allowed under in SMSF under the current laws and regulations? What are the rules? The rules sometimes are complex, so I'm not going to go into the details with some type of investments. However, I will give you as much information as I can with limitations, obviously, because like I said, it's not a financial advice, it's not a tax advice, but I'll give you a lot of information. So you can go and definitely think about what you're going to do next with your superannuation or how you can utilize this knowledge. We are going to discuss borrowing in SMSF. We are going to discuss pros and cons to buy property with related and unrelated party in SMSF. We are going to look at the investing in property using the unit trust, listed and unlisted unit trust. And also we are going to talk about property development in SMSF. So what we are not going to discuss today is what property to buy, where to buy, how to buy. So if you are here to hear some tips, which properties are going, which properties are good to buy, or if you're thinking that I'll tell you suburb or anything, it's not about that. So this is not about which property to buy, like I said, where to buy, how to buy. It's about like what you can do with your superannuation, how you can use it to invest in property. There are different ways to do it. So what type of property? I know property is Australian dream, and a lot of people would love to invest in property. As unfortunately, a lot of us limited. We don't have enough money for deposit to buy a property in our in individual name, or we don't have enough for deposit, or we don't have enough borrowing capacity. There are limitations. So a lot of people look at the superannuation, which is in SA, large superannuation fund, or we already have self-managed superannuation fund and have some cash sitting in self-managed superannuation fund, we are thinking about how we can invest in property. So in the self-managed superannuation fund, again, I'm not talking about, here I'm not going to talk about what self-managed superannuation fund is, what the rules are, because I know it's a little bit of mixed crowd. Some people already have SMSF, some people don't have SMSF. If you want to find out more about self-managed superannuation funds, how it works, give us a call or follow our YouTube channel, follow our Facebook page. There are a lot of information about SMSFs, and also I post short videos all the time. So, and there is a lot of explanation about how SMSF works. So today I'm talking about what type of property you can buy in a self-managed superannuation fund and how you can buy it. So what property is allowed in SMSF? In SMSF, under the SIS Act and the current regulations, you can buy residential or non-residential properties. So non-residential properties, it's usually they call it business real properties. Again, I will try not to use a lot of jargon. However, sometimes I have to use the jargon, which is how it's called in under the current superannuation laws. So business real property is a property which is allowed in SMSF, and it's solely used in one or more businesses and used for business. Residential property, again, everyone knows what residential properties is. It's where people basically live. So rules, when you want to buy a residential property in SMSF, so what rules you need to consider and what rules you need to be aware of. The rule number one, with any investments in a self-managed superannuation fund, it's a sole purpose test. What's sole purpose test? Again, it's a little bit of jargon here, but what it means that the superannuation, the only goal of superannuation is to provide the benefits in your retirement. So whenever you're thinking about investment, the first thing you have to ask yourself, so is it beneficial for my retirement? So, and this is the lens which you use to use when you're thinking about investment. This is the rule number one. Also, whenever you buy the property in SMSF or any other investment, what you need to consider is SMSF trust deed. Read your SMSF trust deed, say if you already have SMSF. If you don't have SMSF, again, trust deed is a like Bible for the self-managed superannuation fund. When you establish a SMSF, you must have a trust deed because it's a governing rules which SMSF, your SMSF has to follow. So SMSF trust deed must allow investment in, for example, in property in this particular case. Second thing, SMSF investment strategy. Trustees must formulate regular review and give effect to investment strategy. So what it means when you set up SMSF, you have to think about your, and you have to formulate your investment strategy. You have to think where you want to invest. There are other things to consider in investment strategy. Therefore, it's very important to formulate investment strategy and make sure that this type of investment, such as a property, for example, in this particular case, this type of investment are allowed in your investment strategy. With residential property, and I know a lot of people are interested in residential property in a self-managed superannuation fund or invest with your superannuation. So with residential property, there are limitations, and one of them, so related party cannot live in it. What is a related party? Again, it does have a common sense. We basically sort of understand what related parties are, but however, there are definitions. So related party is a member of SMSF, relative of the member, like a spouse, for example, the business partners of SMSF member, the relatives, so the spouses of the business partners of the SMSF members, also the companies you control. There is a quite extensive list of related party. It's called related party to SMSF, but basically think about it like definitely your relatives. If you buy investment property, if you buy residential property in SMSF, definitely your relatives cannot live in it. You cannot live in it. Your business partners, their relatives cannot live in it. So there are limitations. So it has to be rented to unrelated parties. So it means the party you don't know, you are not in any business relationship with or a blood relationship with. So you can buy your residential property in SMSF. You can buy it with cash. So for example, if you have enough cash in SMSF, if you have enough superannuation, you can go and buy the investment property upfront. It's a most simple way most uncomplicated way of buying investment property in SMSF. So the title of the property when you buy with self-managed superannuation fund has to be on the SMSF name. This is very important. So basically the SMSF name, say ABC Pty Limited as trustee for ABC Superannuation Fund, trustee name goes on the title of this property. Sorry, so superannuation fund owns it, so it's a proof of ownership. So when you rent a residential property, it's not only a related party cannot live in it, also rent has to be at arm's length. So usually when we buy residential property in our self-managed superannuation fund, we would use the management agent. You don't need to, you can definitely do it yourself. However, there are again some limitations there, but it has to be rented to an unrelated party at arm's length. And remember, when you buy the property, one of the requirements, the SMSF's financials and tax return, they have to be audited every year. And one of the requirements, the property must be at market value. So what it means that potentially could be every year you have to provide the market value or market value appraisal for this particular property. So you don't need to do it every year. However, if there are changes in the market conditions, the auditor will ask for market valuations. We usually provide it every year for our clients to make sure that it's the market value is up to date, because again, market value of the property of any assets have to be verified annually, but especially market value of the property is definitely on ATO radar at the moment. Like I said before, you can buy the residential property, you can buy non-residential. We call it a business real property, the property which is solely used for one or more businesses. So it's completely different type of property, as you know, but the rules are similar. Sometimes they are less restricted. So again, sole purpose test, are you buying this property for the benefits in retirement? SMSF trust deed must allow, SMSF investment strategy definitely must be formulated in a way that it includes this type of property. This property, the real business property, non-residential property, could be bought from related party. The residential property you cannot buy from the related party, it's prohibited, but with commercial property or like real business property, you can buy it from related parties. So for example, if you own a commercial property in your own name, you can sell it to your self-managed superannuation fund. It has to be sold at market value. So, and again, it has to be third-party appraisal, how much this property worth at the time of selling this property to the self-managed superannuation fund. This property could be used by a related party. So for example, if you have a business, you can buy the business real property, commercial property in your self-managed superannuation fund, and you can rent it back to your company, to your related business. So again, it's not allowed for residential properties to, yeah, you can't live in residential property, but with commercial property, you can rent it back to your business. There are conditions. It has to be a legally enforceable lease in place. Lease has to be at market value as well. So no one benefits from the superannuation. So you can't just buy the property and rent it to a related party for low rent or high rent. So basically it has to be at arm's length, again, with confirmation from the third party that this is the market rent, market appraisal for the rent in this for this particular property. So you can buy with cash. You can do in specie transfer. So, for example, if you have this property and in your own hands and you're thinking to transfer it in SMSF, there are ways. Again, you need to get advice about how to do it properly so you don't breach any rules. I can't go into the details, but there are, it's possible. Again, no borrowings allowed unless it's limited recourse borrowing arrangement. This is LRBA. We're going to talk about it later on. Superfund will own the property. Again, the superfund's name, the superfund's trustee name is going on the title of this property. There is some stamp duty concession when you transfer property. Again, it depends on the state, but there are some stamp duty concessions when you transfer the property from a related party to SMSF. Rent has to be at arm's length, and again, annual market valuation from third party. So, which is like real estate agent or a professional valuer. All right, so how you can buy property in SMSF in terms of the ways sorry, I have some questions, but I will answer them later on after I finish with my presentation. Okay, so how you can buy property in SMSF? So the most simple way, like I said, you have cash, you go, you buy a property for cash. Happy days. So it's number one. So number two, you have some cash, but you don't have enough cash. So you want to borrow. In SMSF, SMSF generally prohibited from borrowing. It's section 67. It's one of the main rules. SMSFs cannot borrow. However, there is one exemption. Actually, there are a couple, but for this particular case, there is one exempt, is limited recourse borrowing arrangement. What is limited recourse borrowing arrangement? It's a special structure set up under the limited recourse borrowing arrangement. It's a bare trust. It's another trustee. And this bare trust, which set up is only for the purpose of buying this property. And the recourse, the bank's recourse is limited. So what it means if something happens and you can't pay your loan, the bank can only go after this property. The bank will not be able to recall anything, any other assets in SMSF, any of your personal assets. So the bank can only take this property. So I'll talk about the limited recourse borrowing arrangement in one of my next slides. But this is when you don't have enough cash. Again, there is opportunity to borrow potentially. we need to look at your again at your circumstances. So you can buy property with related party or unrelated party. Again, we are going to discuss it later on. So again, if you don't have enough cash in your self-managed superannuation fund, you can buy it with related or unrelated party, or you can buy it via unit trust, even like listed unit trust. Again, we are going to discuss all this space in the next slides. Buying property with cash, what it entails is SMSF name on the title, straightforward transaction, simple. Net profit tax at 15%. So what's the advantage of self-managed superannuation fund in general is a concessional tax treatment. So what concessional tax treatment means that maximum tax you pay in a self-managed superannuation fund environment is 15%. And capital gain tax 15, 10 or 0%. What it means if you buy the property or any asset in a self-managed superannuation fund and you hold this asset for less than 12 months, you pay 15, and you sell this asset, you pay 15% tax on it. If you hold this asset for more than 12 months, you pay concessional tax treatment, which is 10% tax. However, there is 0% tax, as you can see here. So this is when you reach the retirement. So for tax to be 0%, there are conditions and which need to be met. One of the conditions is the retirement. Retirement is when you hit the age of 60 for most of us. Used to be 55. But now most people, it's age of 60. When you reach the age of 60 and retire from one place of employment, or you reach the age of 65, you don't need to retire. So this is when you can start a pension. It's called pension in your self-managed superannuation fund. And then this is when you can do a lot of things. You can access your funds. You can start a pension, so it means take some income stream out, and your superannuation fund, your earnings or capital gain will be taxed at 0%. So this is exciting, I guess, tax opportunities for all the generations when we get older. So buying property with borrowing, this is a second type of how you can buy property in how you can own the property in self-managed superannuation fund is the borrowing. So with limited recourse borrowing arrangement, like I said, the recourse is limited to the property which you borrow against. The LVI at the moment, 80%. So what it means the banks will lend you no more than 80%. So if you have some cash in your self-managed superannuation fund, this only available in self-managed superannuation fund, by the way. So if, like I said, there are different people from with a self-managed superannuation fund or without self-managed superannuation fund. We are talking about self-managed superannuation fund borrowing, and this is only available for SMSF. To get into limited recourse borrowing arrangement, you do need a statement of advice, because SMSF is a financial product, and to recommend your limited recourse borrowing arrangement, the financial advisor or someone who has a financial license, they have to consider your personal circumstances, objectives, and needs. And because it's not for everyone, it depends. So it really depends on your circumstances. So remember, so you can't just go and say, oh, I want to do limited recourse borrowing arrangement. I want to borrow and go to the bank and borrow in a self-managed superannuation fund to buy property. You will need a proper financial advice to do so. And the banks will not lend you anyway. So they will ask for statement of advice. This was one of the questions already in the chat. So you can borrow from the bank, or you can borrow from related party. Not a lot of people know, but there is again borrowing opportunity from related party. What it means if you have, say, cash outside of superannuation and you would like to lend this money to your SMSF to buy a property, there is a possibility there, but the structure will be the same. So it will be limited recourse borrowing arrangement. So we'll need a bare trust set up with a corporate trustee, with a company, and it will be holding the property. The mortgage needs to be registered. There are conditions for related party to lend money to the self-managed superannuation fund. So the advantages, of course, of buying property with the limited recourse borrowing arrangement is leverage. So you can leverage someone's money, bank's money. There will be fees. Like I said, there is a statement of advice required. There is another structure which needs to be set up, such as a bear trust with a corporate trustee. So it will be establishment fees for the structure. So it could get quite expensive to do limited recourse borrowing arrangement in a self-managed superannuation fund. So there are rules as well. So you borrow to buy the property. So that one of the main rules, you cannot change the nature of the property. Again, the trust deed has to allow, the investment strategy has to be tailored for this type of investment with the borrowing. It all stays in place the same like when you buy property with cash. And also the proper documents. So you have to definitely use the professional who know what they're doing, because if it's not done correctly, you might pay double stamp duty, you might breach the CIS Act and get, like a contravention report from an auditor. So it has to be very, very careful who do you trust with your setting up your structures. So if you want to find out more about limited recourse borrowing arrangement, we have a limited recourse borrowing arrangement blueprint. And if you email us, we are happy to share with you. And there is a lot of information about limited recourse borrowing arrangement in our blueprint. Otherwise, I will leave my details later on, but you can always contact us and book a session, 15-minute session or something to have a look how we can assist you. Buying with related parties. Okay, if you think, all right, what if I don't have enough money in my SMSF, but I still want to buy property, and can I buy it with someone I know, for example, or can I buy it with my other business? So there is a joint ownership, which is possible. So it will be the tenants in common. So say SMSF and a member can buy the property together. So no borrowing allowed. So remember I said that SMSFs cannot borrow. So what it means, again, you can do together with a related party. You can buy the property, but it has to be for cash. So you have to pay cash. You cannot borrow. There is no mortgage allowed against this property. It will be a breach. The only mortgage you can have in a SMSF is limited recourse borrowing arrangement. However, with limited recourse borrowing arrangement, it has to be SMSF only. So it will be one property which SMSF buys by itself. That's it. Or if you buy with related party, again, it has to be for cash. So obviously the disadvantages, the advantage is that you using, like you pulling the money together. The disadvantage is if any dispute arises, if it's, quite a liquid asset property, so you can't sell it in one day. So if there is a cash flow issue or anything, so, like it's hard to get out of the property quickly. Also estate issues. So obviously if SMSF owns part of the property, there has to be proper estate planning. Everything has to be documented. If something happens to the members of the self-managed superannuation fund, what will happen to this part of this property? So, and also you have to have an exit plan. Like I said, if something goes wrong, if I want to get out, what do I do? If I need extra money to repair the property, what do I do? And say the other the other owner doesn't have this cash or doesn't want to spend this cash on repair, what do I do? So there are a lot of things to consider when you have more than one party, obviously. So buying property with unrelated parties. So again, say, oh, what if I have a friend and we buy a property? It gets even more complicated because, of course, you can have the same joint ownership. So on the title, it will be 2 names or 3 names. Say if 3 friends decided to buy property and one of them is SMSF, So it will be tenants in common as well. So no borrowing allowed, the same store. So basically everyone has to pay cash for this property. And managing disputes become big issue. So when you buy with related party, there could be some disputes, and people want to do different things. But when you buy with unrelated party, it's even harder. What if like this party decides they don't want this property anymore? They want to sell it. So, and I don't want to sell it. I'm a SMSF trustee. I don't want to sell it. What do I do then? Estate issues. What if I buy with my friend and my friend got, I don't know, like married, and there is, like another party involved, and like what happened if something happens to them? So what happens if something happens to me? What happens to this property? So there is a lot of potentially legal issues could be in this type of ownership. It's possible, it's allowed, but again, you need advice if you want to go this path. Managed funds, or public funds. So this is the other way of quite easy how you can own a piece of real estate in Australia. Just buy the units in a listed unit trust. Say there are unit trusts, listed and unlisted, which have more than 20 members, a lot of unit trusts which solely and purely invest in properties. So this is one of your ways to own real estate. You just buy units in your self-managed superannuation fund, and this way you own part of real estate. Again, it's managed by professional fund managers. So what it means you don't have any control. You don't know what this property trust buying. Sometimes the property trusts they created for particular property, so you know which property you're buying. But because there are many owners, everyone owns a little piece of this property, you don't have any control. What you receive a distribution. You don't receive the income from the rent or capital gain. You receive a distribution because you own a unit or units in the unit trust. So SMSF does not own the underlying asset, like I said, you own the units. But this is one of the ways, if you don't have enough cash to buy your own real estate, this is one of the ways how you can own a piece of real estate in Australia. Buying via listed or via unlisted unit trust. So this is one of the quite complex structures, but again, it's allowed in a self-managed superannuation fund. So the unlisted unit trust, they can be related or unrelated. The self-managed superannuation fund are not allowed to invest in related unit trust. So, for example, unless it's under 5%. So what it means if SMSF has assets and it's 100%, say $1 million of assets, and SMSF can invest in related unit trust. Related means related parties own it, and related parties I already gave a list. So if SMSF wants to invest in related party unit trust, they can invest no more than 5% of their assets, of its assets. So if, for example, SMSF has $1 million in assets, so 5% will be like, what, 50 grand. So under 50 grand, it will be called in-house assets. You can invest in related company or in related unit trust. So no more. If you invest more, it will be a breach. However, there are some exemptions again, so like everywhere. So we look at related unit trust. So if SMSF wants to invest in related unit trust, what it means a unit trust is owned by a related party. So SMSF can do it, say like SMSF and a business which owned by the members. So they can do it only if the unit trust is so-called ungeared unit trust. There are quite a few limitations what you can do in this trust. So, for example, borrowing is not allowed in this trust again. So yeah, SMSF buys units, say member buys units, business buys units in a unit trust, and they all buy the property. Could be done. However, no borrowing is allowed. This type of unit trust cannot own any shares in any other companies. There is no, could not be could not be borrowed money from the bank, could not be have any charge against the property. So there is no, like I said, mortgage allowed. And also, this unit trust cannot do any business. So the only purpose of non-geared unit trust is to buy the property. So no business, no shares, no interest in other entities, no borrowing, no lending. So basically, the trust distribution has to be done before the year end, and all the profit has to be distributed to the beneficiaries. So if profit is not distributed, extra tax on this distribution, which is 45% tax. So there are rules, and there are some, of course, establishment fees for this type of unit trust. Again, you definitely need advice. Don't do it yourself. So if you wanna invest via related unit trust, which means with related party and SMSF, go and get the proper advice. So unrelated unit trust. What is unrelated unit trust is what ATO is saying, it's less than 50% owned by related parties. For example, 2 SMSFs or 3 SMSFs, unrelated, decided, okay, we want to buy the property. In this particular case, it's called an unrelated unit trust because SMSFs are not related, and they can buy the property. So they can buy, each SMSF will buy units, and in a unit trust, and unit trust will buy property. Why? Again, because of pooling power. So you get the money from few self-managed superannuation funds. Sometimes it's 2, sometimes it's 3. 3 is better because it's, say, every super fund owns 1/3. If it's 2 superannuation funds, have to be careful that none of the superannuation funds has more control than another. So the super funds has to be completely equal. So what it means, exactly 50% shares owned. There is no voting power. There is not like one super fund, like I said, has different units, type of units than another. So to make sure that none of them have a control, if one of the super funds has a little bit more control than another, it will become related unit trust for this particular super fund which has control. So it means what related and unrelated unit trust, what's the main difference? Unrelated unit trust, no control, right? So 50-50, it means none of the super funds controls the unit trust. Related unit trust, full control. So, and again, SMSF, if SMSFs are buying property in unrelated unit trust, SMSF do not own the underlying asset. In related trust, the same. SMSF do not own asset, which is a property. The unit trust does. SMSF owns the units. SMSF buys the units, and SMSF owns the units, and SMSF receives the distribution from your unit trust. Obviously, there are establishment fees to establish this type of unit trust. There are annual compliance fees because you need to do the annual tax return, not only for the self-managed superannuation fund, but for the unit trust as well. Again, you need to get the tax agent to do it for you, and you need to get the proper tax advice to use this type of like structure. Right, property development in SMSF. A lot of people get excited when they hear, can we do property development in SMSF? And ATO confirmed a couple of years ago that it's allowed, so you can do property development in SMSF. However, As everything in SMSF, there are limitations. Again, number one, sole purpose test. Are you doing it for benefits of the super fund, or you're trying to escape the tax liabilities, or you're trying to put more money in SMSF where you're not allowed to, or you're trying to do some sort of like things which are not allowed. So the second thing is trust deed. Read your trust deed. Is it allowed to do the property development in your self-managed superannuation fund? I don't know. Every trust deed is different. Number three, investment strategy. Have you formulated your investment strategy that it's allowed to do allow you to do the development in a self-managed superannuation fund? This number, like these three first conditions, are must no matter what type of investments you do in a self-managed superannuation fund. Sole purpose test, trust deed, and investment strategy. Always look at these three first. So strict rules for property development and self-managed superannuation fund. Say the easiest way, the cleanest way, you have cash, you buy the property, you develop it in self-managed superannuation fund. Beauty, that's it. You pay tax on it, which is 15% or 10% or 0% if you are at your retirement stage. So that's it. So, however, a lot of people don't have enough cash in self-managed superannuation fund, but they still want to do development. So how can you do it? For example, you can do it in, if you buy property via limited recourse borrowing arrangement, you cannot do it straight away, I'm telling you, because you cannot change the nature of the property. One of the conditions with borrowing through the bank is you buy this property, you cannot change the nature of the property. So it means you can't renovate the property. You can repair the property. Repair and renovation, different things. So you cannot borrow from the bank. So you cannot do business in a self-managed superannuation fund as well. So it's basically, it has to be sort of like one-off thing where you do the property development for the benefits of the self-managed superannuation fund. Not like I'm a builder, I run a business, and I do it via self-managed superannuation fund because it's a concessional tax environment. It's not going to work. It's very obvious when people try and again to avoid paying tax. So related party builder, this is where very often people think, oh, I'm a builder, I can do property development in my SMSF. Potentially you can, but not as a builder. So you have to be completely independent. It has to be the contract. It has to be as a builder. You have to be paid. Say, for example, if you are doing it as a builder, you have to be paid for your work. And also all the materials, all the contractors have to be paid from the super fund. And it has to be on the SMSF, all the invoices have to be issued on the SMSF name. So, for example, as related builder, you can't go and buy the materials under your building company name. This will be breach. Everything done via self-managed superannuation fund. So there is no margin, potential build amount margin you can make. So yeah, there are rules, there are regulations. So again, how you can do it? You can do it via with cash. You can do it via unit trust. Again, you buy units. It could be related or unrelated unit trust. The limitations we discussed before, the limitations exactly the same. Doesn't matter if you do property development or not. Or you can do the loan to the development company. So the loans are allowed in a self-managed superannuation fund. So, and this is one of the ways how you can get involved in the development. So you just do the loan from SMSF to the development company, and they do development. So nothing to do with SMSF as a development side, it's to do with like loan. Again, a loan has to be at market rate, the interest. It has to be in writing. The conditions must be commercial conditions. So there are a lot to consider when you think about the loans. But again, It is a possibility, and you can talk to the professional to find out if it's a good option for you and if it's the right option for you as well. So these are the property development, just like, again, general information, but there are a lot of rules which you need to consider when you do property development in SMSF. So risk of property investment, of course, everything comes with the risk. So breach of SIS Act. There are a lot of rules, regulations, which, again, if you're not guided by the professional, it's easy to breach. Don't do it yourself. Go and find a professional who you trust. If you breach SIS Act, SIS regulation, ITO administrative penalties could be applied to you. So which is like one penalty is $275, and any breach like in-house rule breach or any other breach, most of breaches will have 60 penalties. So 60 multiplied by 275, you can imagine how much it could cost you. Property can become in-house asset, like I said, if you do the investment wrong way. So it could become in-house asset. In-house asset, like I mentioned before, only 5% could be invested in a related entity, such as a unit trust or or related company. So if it breaches 5% limit, it will become in-house asset. You have to come up with a plan, which will be like selling this asset. It will be the breach, which might lead to administrative penalties, etc., etc. So forced to sell a property, basically, is the result of breaching in-house asset. You will be forced to sell this property, because how you can rectify this breach? It's already like in-house asset, so it's a related party asset, which is not allowed. NALI, what it means, non-arm's length income, non-arm's length expenses. Again, it's a little bit of jargon here, but if your super fund receives too much income because of some sort of, for example, in property development, because you want to push more income into tax concession environment, it will be non-arm's length income, will be taxed at 47%. Non-arm's length expenses, it's on the opposite side. If, for example, you provide some benefits to your self-managed superannuation fund, such, for example, again, as a builder, you go and do some work for your self-managed superannuation fund, you have to charge, say, like some renovation, right, of a property, you have to charge your self-managed superannuation fund at arm's length. If you don't charge, it will be non-arm's length expense. Again, 47% tax. So there are rules. They're not complicated, but they are complex. So you need to know, again, what you are doing and get the right advice. With good questions. So a little bit about like Easy Super and how we can help you. So obviously, with 20 years of experience, we deal with clients who are dealing with properties. We deal with them every day. We do SMSFs only. We don't do any other entities. We don't look after companies, individuals, or unit trust. We do self-managed superannuation funds, and we do it really well. So, and this is how we can help you. So if you need advice, if you need your tax return done, if you need your audit done, if you're in trouble, we do have a lot of clients who already didn't get advice, done something wrong, in trouble with ATO. Again, we can help you and try to fix it, rectify the breaches, and deal with ATO as well. So again, because of I'm a authorized representative with limited license, we do SMSF advice, SMSF establishment, we do SMSF compliance, audit, etc., etc. So this is our website, www.smsfconsulting.com.au. We have a lot of guys, we have a lot of information. on our social media. We have a lot of information on Facebook, LinkedIn, Instagram, YouTube. Just have a look and follow us. I put videos all the time. If you have any burning questions, send me a question, and I definitely will do a video in regards to the question. So just stay in touch, and let's see if we have any questions. Are you providing a broker service to get loan for SMSF? No, we don't provide a broker service. We, like I mentioned, we provide advice. We do financials, we do tax returns, we do audits, but not the broker service. So it's not hard to find a broker who can do SMSF loan. Just give us a call if you basically stuck with it, and we can help you out. I don't have anyone in house, but I definitely work with a few brokers. Potentially I can give you the few contacts. Yeah, it will be recorded, Patrick, and posted on YouTube, but not for public, like I said, only for people who are registered. Are there any limitations for the number or for the number or type of properties SMSF can own in case if there is a loan? Yes, if there is a loan, for this loan, there is a special entity is established, which is a bare trust with limited recourse borrowing arrangement. If you want to buy another property, you need to do another structure. So you need to do another bare trust with the corporate trustee, because each bare trust is set up for a particular property. There is particular address, and there is particular title search. There is title there, title number on the bare trustee trust deed. So basically, if you want to buy another property, you can buy it with cash, unit trust, or another limited recourse borrowing arrangement. You cannot use this property, which already has a borrowing against it, for cross collateralization. So no, you cannot take any equity out, obviously, and you cannot use it to secure another property. So this is just a standalone, separate arrangement. And if you have more cash, buy more properties if you want to. What is the monthly estimate fees for SMSF? It depends. It depends what you do in the self-managed superannuation fund. Monthly, usually if you go to the administrator, they charge you monthly fees and they charge upfront. If you go to the accountant, we usually charge you after we complete the job. For example, Easy Super, we charge annual fees after we complete the job, and annual fees could be between for SMSF, and the audit could be between 2,000 and I don't know, up. Depends what you have in self-managed superannuation funds. Some self-managed superannuation funds are very complex. They have unit trusts, they have crypto transactions, they have limited recourse borrowing, they have loans. So it's, yeah. But average super fund, I would say, would be about 2,500 per year. Annual audit fees for SMSF for one property in it. Again, it's usually around 495, between like 440 and 550. Is that cash should be from your super, or you can use cash from pocket? Okay. what cash, I don't understand, is that cash should be from your super, or you can use cash from your pocket. Whatever you buy in super has to be with superannuation money, unless you are buying with related party. So for example, superannuation fund puts half for the property, and you, Marina, put half for the property. So you buy 50-50 with a self-managed superannuation fund. It's going to be on the title 50-50, but no borrowing allowed. So you have to have cash in your own name, and super fund has to have cash in a super fund, obviously. But whatever super fund pays for, they have to pay it from their bank account. Thanks. So any other questions? How are we doing with time? Oh, just on the dot. All right. If you don't have any other questions, this webinar, like I said, is going to be recorded. I'm going to send you a recording, and you can watch it later on. But if you have any questions, give me a call or send me a message at inquiry@smsfconsulting.com.au. Also, watch our videos. If you have any questions, send me a question and I will put the video on. And talk to you soon. Bye, everyone. Have a nice weekend.